Welcome to another episode of the Real Estate Investing Fast Track podcast. If you're not familiar with who I am, my name is Greg Helbeck. I've been a full-time real estate investor now for a decade. I've done almost 400 properties that have been bought and sold, so I got a lot of experience. And the point of these videos and podcasts I make is to share with you what I've learned so you can benefit from my experience. So if you get value from this video or this podcast, you can do me a favor, like the video, subscribe to the channel, and if you're listening on audio, if you can share this with somebody else and post it on social media, that would really mean a lot to me. And today we're going to actually break down a light fix and flip deal that I did in Tacoma, Washington, down in the Parkland area. So I'm going to tell you, how did I find the deal? What were the numbers like? And, what were some lessons that I learned? And hopefully you could take this and apply this, whether you're new or whether you're experienced. So first things first, this deal came to me was that one of my friends who's out in Eastern Washington got this lead in South Tacoma, and, it was in decent shape. The owner bought the property I think 4 or 5 years ago, and they were letting their kids live in there, which usually is not a good idea. The kid kind of banged it up real bad, but it was on a good sized lot, and there was a pole barn, detached garage on the lot. It had a bunch of extra square footage that was bonus space, so it was a pretty dope house. So anyway, we ran over the numbers, and, I basically told them I'll take it, so they ended up wholesaling it to me. And they gave me a really good price on it from a wholesale standpoint, so I agreed that, if I buy it at that good price, I will split the upside with them, and we'll split all the capital. So we'll get hard money, and we'll split all the funds, and then we'll split the profit 50-50. So I paid them a tiny wholesale fee, but then we agreed to basically partner on the back end. So that was the arrangement we had. All the money was going to be split 50-50, and then all the profits were going to be split 50-50, assuming we made a profit, which we did. So we ended up closing on it. I believe we paid $332 for it or something like that, which I didn't think was that good of a deal in terms of the initial purchase, because I only thought the house was probably worth $400 on a good day. And I'm like, well, we only have really 70-ish grand in the middle, so we may break even on this. And especially if we spend, 20 grand on a rehab, by the time we pay our soft costs and excise tax in Washington, it's going to be tight. So, I committed to the deal. They committed to the deal. We weren't going to screw the seller over. So we ended up closing on it. I got hard money from Kiavi. So they gave me 90% of the purchase. So I was out of pocket, I don't know, $33,000 plus closing costs. So about 43 grand to close on the deal, which was 20 something each. Closed on it. I got my realtor, who's a good friend of mine, Danny, walked the property. We went over the game plan. We used his contractor and ended up doing a really good job. He didn't do anything crazy in there, but we did some sheetrock work, some tape work, replaced the vanity, did some trim work, just spruced it up. So we did a glorified cosmetic rehab. It wasn't anything. I think it was $18,000 when it was all said and done. So we got a pretty good price on it. So that took about, 3-4 weeks. And then once the property was completely, cosmetically changed, we looked at the comps, and, Danny was like, hey, I think if we list this at $425, it should go pretty quick. So I said, let's do it. We ended up throwing it on the market. So late April, we list the house on the market on a Thursday, and we had so much demand for this house. I did not expect this, because the comps were kind of neutral. There were some houses that were selling for more than we thought. There was houses selling for less than we thought. So we just kind of figured, in this case, 425 is a good number. If we got 425, I believe the profit on that would have been 18,000 split in half, right? Which is a tight deal, but we already owned it. So what are you going to do? You can't go broke making a profit, so they say. End up throwing it on the market for $425, and literally 2 days later, we had 10 offers. It was crazy. We had a whole spreadsheet filled with offers. There was a ton of demand. The buyers really liked the extra space where there's a detached garage pole barn, and it was a big lot, quiet neighborhood, good value for, what you're getting down there. So anyway, we end up taking an offer of $450. They waived their inspection. They closed a month later. We got 25 grand more than what we thought. So when it was all said and done, we each made $18,000 in net profit. So the total project profit was 18,000 times 2. So it was 36 grand, right? And that was on a house that I didn't think we would even make any money. I thought it was going to be a break even best case when I initially closed on it. So what are some lessons that you can learn from me here that you can apply in your business? And I've made this lesson before many times. Work with your competition, right? I met these people at a real estate event in February, and we've done several deals since where we both made money, and it's been win-win situations. They're out in Spokane. I'm local to the Seattle area. I know it pretty well. I have good connections here. They're good at getting leads, so it's a good scenario when we can partner up on deals once in a while and make money together. So work with your competition, right? The more people you know, the more deals you can do, the more money you can make, the more people you can help. Lesson number 2 here. You want to underestimate properties in terms of like what you think they're going to sell for, right? Like I didn't think this property was even going to sell for 425 and it ultimately sold for 450, right? I went into this deal thinking it was a 400 exit and I had the expectation that we're probably going to break even. And I was okay with that because I already own the house and I already committed to the deal. I didn't want to back out and, screw anything up. So because I expected so little on this deal, when we ended up getting a lot more than I thought, I was pleasantly surprised. And, we were both shocked. Like, wow, that's awesome. I didn't think that would happen. But I was conservative with my numbers, right? So when you're flipping properties, whether you're wholetailing them and cleaning them out and listing them, or you're doing some sort of work to them, you have to assume the worst and hope for the best, right? So don't ever run a deal. Like in this case, if I was banking on this thing selling for 450, I would have had the wrong expectations. Obviously, that ultimately happened. So when you're flipping properties, you want to price them a little lower when you list, because if you list it right and you price it low, you're going to get a lot of demand, hopefully, in your market, depending on where you are. And then ultimately you get more, right? If you list high to begin with, sometimes that just kind of spooks out buyers and the property sits and you ultimately sell for less. But if you list it for less than what it might be worth and buyers see value based on the price, you're going to get multiple buyers who want it, which is ultimately going to get you what you want, which is more money for the house with better buyers, right? Especially when you have 10 offers, you got to tell the buyer, hey, well, there's 10 people, there's one house. So you got to submit a good offer from a price standpoint, and B, that same offer needs to have good terms. We need a no inspection waiver, or we need an appraisal waiver, or whatever the case is. But when you have multiple buyers because you priced a house well, you have a lot of leverage as a seller, right? But when you have an overpriced property and not many buyers, you're at the mercy of whoever's interested, right? So that's not a good way to flip houses. So that's the second lesson. And then the third lesson on this is that when you are flipping properties, right? And when I say flipping properties, I'm defining that as buying a house, owning it, and then reselling it, right? Whether you're ripping it to shreds and rebuilding it construction-wise, or whether you're literally cleaning the property out and throwing it on the MLS, if you're on the deed and you actually are selling it in the open market without a predetermined buyer, i.e. a double close, most of the time, unless the house is falling down, it makes a lot more financial sense to put less work into it and sell it for less money, aka wholesale it, than it does to gut it and rehab it and take on that risk and that construction and the building department drama. So most houses I buy that I flip, I put like 25 grand or less worth of work in them and I sell them for fair market value and they're in decent shape. They're not beautiful, right? They're not like brand new. I mean, sometimes I do that if the deal warrants that, but a lot of times I just sell it as is in better shape than it was before I bought it, but I don't gut rehab properties, because when you gut rehab properties, then you're dealing with the building department shutting you down and you're dealing with contractors and a big scope of work and a lot of cash for the construction. So a lot of times, if you look at your deals and the house is not falling over, you can sell it for very good money as is with 25K or less worth of work, aka wholesale. And that's a better way to do your business. From my experience, it just makes a lot more sense. You're going to make the same, if not more money, shorter timelines, less risk to a certain extent. So that's my third lesson. I hope you enjoyed this deal breakdown. This was in Tacoma, Washington, in the Parkland neighborhood. But hopefully you got value. And if you're in Washington State, preferably the Seattle, Puget Sound area, or you're in the Hudson Valley, or you're in the state of Delaware, and you have a house you want to wholesale to me like they did, and partner up on it, send me an email, greg@velocityhousebuyers.com, or send me a DM on Instagram. Or if you just want a JV wholesale deal with me or whatever, we do that all the time. greg@velocityhousebuyers.com or at grego_37 on Instagram. I'll see you on the next REI deal breakdown.